Hello everyone, welcome back to another Aerial FX video. In this episode, I will be covering how to build multiple confluences for high risk reward trades. Now, I'm not just going to go through some charts and just call it a day. I'm going to give you guys step by step what you need to do in order to properly get high risk reward trades through scaling in from multi-time frame perspective to build multiple confluences for your everyday trading. So I have two examples, so I will be going over two trades. However, I'm going to give you an outline as to what I look for on a day-to-day basis when analyzing the market. So first and foremost, let's start off by looking at the higher time frames. We have to understand where we're headed. So overall, we are in a bearish market, but that doesn't mean that we can't be buying counter trend during the current time, right? So let's scale into the 4-hour time frame. And we can see right in here, we are making lower lows and lower highs, but what's interesting about this is that we have relatively equal highs right in here. All right, relatively equal highs that have not come up into our overall objective. This candle pierced this liquidity. We took all of this buy side liquidity in here. We had the big run up and then we fell. We pulled back, but we never filled that imbalance. We can see that there was just selling volume within here. All right, so first and foremost, we have to determine where we're headed for the day, maybe headed for the week. We don't really care about looking at the daily time frame in terms of areas of interest. Now, if we were coming into something, then that would definitely be in the back of our minds, but that doesn't mean that we should be waiting for price to reach a certain level because that would take days, weeks, or even months. And we want to be trading, sometime throughout the week if there are lower time frame setups based upon the higher time frame trend or counter trend for that matter. So as we do scale in, we can see that this is our overall objective for that maybe higher time frame continuation to the downside. So that would be continuing with the daily time frame trend because we are overall bearish, or we would be coming up into 1.48199 for continuation short to fill that imbalance and hit this sponsored move. Now, we are pulling back because we can see on the lower time frames, we were making lower lows, lower highs, and then we broke structure to the upside, creating that higher high. So now we are in this pullback phase, in my opinion. This is not a bullish trend on the higher time frame. It is on the lower time frame, but on the higher time frame, it's just an overall pullback. And we can expect that pullback to push up into our overall level. Now, if we do take buy-side liquidity here and have a deeper pullback, then I would expect price to come into this higher time frame, large buy to sell that ultimately broke structure and made that overall lower low in the market. Or coming up into this intermediate level of supply. Why is that supply? Because you can see high, low, high, low, high, low, high, low reaction off of this demand level, and we failed to generate a higher high, and we ended up breaking to make a lower low. So now this demand flips to supply. So that is an overall pullback level that we could see here on Euro AUD. But first and foremost, we don't know if it's going to do that, so we want to be first targeting that area of supply first. All right, so now that we know where we're headed, either this level or further up, we can scale in and look for our potential trades. So we are counter trend bullish now. So let's see what's going on in here. Now, we can see that we had an area of imbalance, but that was filled with this wick. Now, we came down again. There wasn't really anything valid in here, so I didn't take a trade. But when I saw the reaction in the higher high, I can see clearly that we had a sell to buy that swept liquidity that maintained our structure because we broke counter trend here. We swept equal lows, sell to buy, and we pulled back. We failed to make that lower low, and we actually made a higher high. So now this validates the demand here, and this creates another demand zone. So now we can see that we're pulling back again, having not come into the objective yet. If we had come into the objective and then started to fall like this, I probably wouldn't be looking for buys anymore because then we should be overall looking for lower lows because that objective was met. But in this case, it was not. So we can still look to buy. So we can see here, this is the candle that swept the liquidity. Now I say, not all the time will the last sell before the buy candle or a buy before the sell candle be the sponsor candle. That doesn't make it valid sponsor candle. What makes it a valid sponsor candle is the candle or the region of price. See, it could be a series of candles. In this case, really, this is our last selling volume. So this is where the liquidity was induced, right, to take out these lows in here. Same thing, whoops, excuse me. Same thing that what's going on in here. This was the area in which liquidity was induced, taken to sweep this high, or this low, to make the high, right? So we created that higher high as a result of this sell to buy. So we really just have to play around with the time frames to see what time frame looks best. And in this case, I like the 1 hour because it has a clear imbalance. And you can see that here between this wick and this wick there. It's just straight buying volume. There's no selling that was offered in here. So we finally came down and offered sells to make the market efficient, maintaining our structure, filling in balance, and then making that counter trend higher high now. So we can continue with the overall trend. So now let's zoom into what's going on in here. What created this sell to buy? Well, it happened to be on the 5 minute. This is where we just have to play with the time frames. So we can see here that before we make this lower low to come down into this region of demand, we create equal highs, relatively equal highs, right? We need to sweep this liquidity. So it gives a strong conviction that once we come into this level and react and break counter trend, you can pull back to fill that imbalance and then continue to take out liquidity. Now, I didn't see this in time, so I didn't catch this trade. However, I caught another trade that I will be going over here in a minute, over to the right in here. But nonetheless, we have that reaction. In that 5 minute time frame, we create imbalance that was filled, but we do come down again and tap it. The reason why we come down again is most likely because the institutions didn't get all of their orders into the market at that one price. They had to get in right here, push price up, come back down, create more liquidity to then go and get the rest of their orders in before making the move to the upside. So when we finally come into this region of price, we can scale in, and this is where we just have to play with the time frames. Like I say before, it's not always going to be the 1 minute time frame that happens like this, right? It just so happened to look pretty on the 1 minute. And we can see the accumulation prior to coming into this level. We're starting to slow down in price. Now, I actually didn't even check the VFI here. This is the first time I'm checking this. Let's just see if we have divergence. In this case, we have a little bit of divergence. We can see price is still pushing down, while volume at the same level is starting to rise a little bit. So not much divergence, but we do have a little bit. I use divergence as a confluence. It's not always necessary for me to take a trade. So we accumulate, we had our final push down, and we broke the counter trend structure to the upside, which is why when we pushed back down to retest, we never made that lower low. And we ended up making a higher high to clear structure, and now we're counter trend bullish and higher time frame bullish. All right. So the confluences here that we're starting to build up, you need to be looking for market structure. Where are we headed? Doesn't matter if we're headed lower on the higher time frames. Could we still potentially be pushing up on the lower time frames? Have we hit a higher time frame objective yet to come into, let me just zoom out here. Have we came into a higher time frame objective before moving in the higher time frame direction of trend? In this case, we're counter trend bullish, we're overall bearish, but we haven't come into the higher time frame objective yet. We have to understand where price is going. Because if we enter and not know where price is going, what's the point of taking that trade if you don't know where we're headed? That's the whole point of trading, is having that conviction and that high probability chance of price is going to push into X, Y, and Z level, whatever that may be. In this case, it's 1.48119. Okay, so at least we could have a deeper pullback, but since we're counter trend bullish, this is the overall objective we ought to really come into. Okay, so we know the market structure. We know the objective. The objective has not been met yet. We have liquidity here, right? So liquidity, relatively equal highs. Okay, so that will be the overall draw on liquidity to come attack those highs here, because liquidity rests above these two highs. Go and attack that liquidity to free up the liquidity to potentially push price down from this level. Because how are the institutions going to not only mitigate, but add additional positions here? If they have to generate liquidity prior to doing that, free up the liquidity. So now they own that liquidity so they can, well, I shouldn't say own, but there's enough liquidity because they've taken it to be able to place a large sum of contracts at that particular price. So you guys have heard the term slippage before, I'm sure. Slippage is when, there's not enough liquidity at that particular time of day, at that particular time, or that particular price for your order to be filled. Now, that really happens during times of low volume. That happens, when there's not enough liquidity when prices approaching an area of interest and banks are looking to push up into it, they have to generate it or else they'll skip liquidity or they'll slip, right? So if that's the case, if they slip or if there's not enough, they have to come back down and come right back up, tap it again, maybe take out this high here liquidity and then go again. So that's why sometimes it comes up multiple times because sometimes there's not enough liquidity to make or to put on all of their contracts, if that makes sense. All right. So they're generating liquidity. That doesn't mean they're going to sell from this level, but this would be the objective because we swept a lot of liquidity and then made a massive move in the right direction. So that could be a target level for any buys, or maybe we could look to short from this level upon confluence, or we could just push higher, right? So we have market structure, we have the draw on liquidity, we have the objective, we know where we're headed. Now it's time to zoom in for a potential entry. So now that we've been approaching these demand levels, we always want to be buying at discounts. Who wants to be buying at a premium? What do I mean by that? And most of you probably will know this. If you pull your fib from the most recent swing low to the high here, a premium price is anywhere above the 50%, a discounted price anywhere below the 50%. So in all reality, we want to be buying at the lows, selling at the highs. Who wants to be buying up here? Who wants to buy at a higher price than they can get a better price for? Who wants to be selling at a discount? I use the analogy of shoes, right? If shoes are worth $200, why would you want to sell them for $150? Why would you want to sell them at a discount? You might want to sell them at face value or maybe at a little premium to make a little money. And again, it all depends on the wear and tear of the shoe, but you get my point, right? You always want to be buying at discount, selling at premium. So this is where we need to be looking for in premium price, okay? So we didn't get this trade here. I didn't get this trade either because I don't really look at Euro AED that often. But what I did get was this trade in here. So we generate liquidity. All right, we actually have sort of a retail head and shoulders. Shoulder, head, a little bit of a shoulder there, and then we sell off and entice the sellers to come into the market, then boom, right back to the upside. Retail loses yet again. Okay, so we have more liquidity to come and take. We also have an area of interest that we're looking to react from. So we know where we're headed, number one, of a higher time frame objective. Lower time frame trend. We know we're looking to buy. 3, area of interest to buy. In this case, it could be this last selling volume. It could be this imbalance. Even though it was already filled, that could be an area which could come into. We need to look for psychological levels. So in this case, 1.45800. That's exactly where that blue box starts. So that psychological round figure. That's not always a requirement, but if it's a really good confluence if you have psych levels surrounding your areas of interest. All right, so now that we have that, we're starting to react from it. We're starting to slow down. Well, what can we look for? Now we need to look for potential liquidity runs into the level and then a break of counter trend structure. So in this case, it was a little liquidity here. It wasn't really that pretty, but we did accumulate and we finally made that higher high after reacting from our area of interest. So we know where we're headed, higher time frame objective, lower time frame trend, lower time frame area of interest, break of counter trend structure. Now we need to look for the entry. So these are the confluences you want to get. So we can see here, this is really the last selling volume within this push to the upside. So I just took it at 1.4593. You probably could have taken it a little lower, maybe somewhere in here, between here and here. That's a little demand. That's always a potential, but I didn't want to miss out on this trade, and I had a great risk to reward because of it. So when we're scaling in, especially to the 1 minute, 2 minute, three, four, five, whatever looks pretty, right? It may not always look the best on the 1 minute. In this case, it did. So that's why I'm saying for this scenario, the 1 minute time frame worked out for me. So I did get this trade. I longed it from this region, and I'm just going to make this pretty at the exact price. There we go, 19 pip stop. And then we are targeting that overall objective, and we can see that will produce, just going to make it exact, that will produce a 1 to 11.5. So just that trade in and of itself could pass a prop firm challenge. 11.5%, just risking 1%. If you risk a 0.5%, you still make close to 6% return on this trade. So we completed the accumulation, we broke counter trend structure, we pulled back, we actually generated more liquidity right here, right? Generated some liquidity, and then we pushed down into it and we started to go. Okay, then during Asian session, we actually ran it one more time. Now, what's interesting about this, and I know we're blurry, but this is on the 1 minute, so I have to kind of zoom out here. We generate more liquidity, relatively equal lows. Okay, we have the fake break of structure. You don't know if this is a fake break of structure until we come back down and then go long. But in all reality, our stops go below the low, so we're safe. And we can see that never hit. We fake breakout to the upside, enticing these, breakout traders. We can see that sort of consolidation block. We break out to the upside, entice the long traders, push right back to the downside, take out these equal lows, maybe entice the short sellers below these old lows, the support, and now we go long. So in and of this, we have a sell to buy. So now we can zoom out for another potential trade. 15-minute time frame, we can see on the higher time frame that really this whole last sell to buy induced the buyers, induced the sellers, took the buyers' stop losses, took the seller stop losses up here, made the real move in the market. We got in with a 1 to 11.5. We are currently floating this trade around a 1 to 4, which isn't that bad. Stops have been moved to break even, partials have been taken a little bit, and we are going to hold into our overall level. If we do have an overall pullback, we can see we're generating liquidity here, 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 and here to maybe potentially go and take it. And we can see, look, this might be a head and shoulders, right? A fake out, sell to buy, take the stops, come into our overall level to mitigate and continue. So that's another potential opportunity. This isn't the best risk to reward in the world, but at the same time, it meets my rules. This is about a 30 pip stop and up into that level, a 1 to 6.73, still a phenomenal risk to reward. All right, so this trade plus this trade is almost 20%. It's about 17, a little over 17% for those two trades. But we can see the confluences that we need to build up prior to entering into a trade. So it's very important that we're not over trading, we're not over leveraging. We don't need to over leverage. This is a 1 to 11.5. And we're waiting patiently for the setups to arise, because who needs to take invalid setups or setups that don't make sense just because you want to get into the market? There's no reason for that. Okay, so we did take this trade, and if I hop over to my Discord channel, you will see that exact same markup on that day, August 8th at 12:02 p.m. Eastern Standard Time, right back into that level in which we bought it, 1.4593. Here was the markup, and that's exactly what we did down below. I'm just going to go to it really fast. And we can see right there, we hit it on August 8th. Perfect. So now we're looking at that re-entry, and we are in really good profit. One more example here. So this was a trade that I did not take, but I did see this when price was pushing to the upside, and I'm really frustrated with myself that I didn't see this in time. But this was on like the 2-minute time frame, so trying to keep up with all these pairs for everyone is quite difficult sometimes, so you have to forgive me. But anyways, I'm going to go over another example of how we can build confluence within our smart money strategy to yield high risk to reward setups. So again, first and foremost, let's start off by talking about the higher time frame structure. Now, many people would say we're consolidating. Yeah, you know what, we are, but in consolidation blocks, we can potentially see lower time frame moves. So in this case, we had a lot of liquidity pushed to the downside, and we're continuing to sort of trickle up within this higher time frame range. So lower time frame potential buys could work out for us. We are overall bearish, and we have equal lows in here, but counter trend, we are bullish. So sort of like that Euro AUD example, we can still be looking for counter trend trades if it meets our rules and we haven't hit objective yet, right? So let's take a look at, first and foremost, where are we going on a lower time frame? We're bullish because we had a quick sell to buy, break of counter trend structure. These equal lows were taken. These equal lows were snagged here just by a few pips. We can see that wick. And then we made that move back to the upside. We popped back down, retested market structure, accumulated. This was the trade I'll go over, and then we expanded. So we haven't hit objective yet, but we know we're going long. We have the equal highs to go and take, so that's going to be the draw on liquidity. And then I believe on the 15-minute time frame, this would be the objective right above these equal highs, just in case we do respect this huge buy to sell that came into supply. This imbalance that we haven't filled yet. We can see there's a wick here, and this started the imbalance with this overall sell move, right? This huge push of volume short, we created that imbalance. So between this wick and really this wick here is just selling, right? There's no buying that was offered. So now we need to go and fill it. If we do go long, we can always hold runners. That's why we take partials and move stops to break even. And maybe if we want to, we can hold a runner. If we do end up maybe sweeping this high and maybe this high and having maybe a deeper pullback, maybe into 1.33 psychological level, 1.34. But who knows? The current take profit price, 1.3228. And that still will provide us with a great setup. All right, so we understand that we swept liquidity here. Equal lows were taken. Sell to buy, we broke counter trend structure. In the meantime, we created more equal lows here. So oftentimes what will occur is that when we take liquidity and we push to the upside, we'll have these smaller retracements and then we continue, but oftentimes we'll come and run these lows because we have to, again, generate liquidity before mitigating a region of price to allow for more orders to be placed. So in this case, again, we create liquidity here, equal lows, and in a sense, we have this mini head and shoulders pattern, right? That we go and snag, sell to buy, sweeping these lows, enticing sellers below these lows. But in all reality, we're bullish on the counter trend, okay? So we can also pair this with other pairs, like Euro GBP is pushing up, Euro NZD is pushing up, Euro AUD is pushing up, Euro USD is pushing up, Euro JPY is pushing up. Where do you think Euro CAD is going to go? We really don't want to be taking short positions when we have strong correlation with the other euro pairs. All right, so we swept liquidity with this wick just by a few pips, but it is a liquidity run. We took that. We pushed up to the upside, kind of consolidated a little bit, had one last drive down, and then we moved to the upside. Okay, so on the 1 hour time frame, it just looks prettier, but again, 1 hour is the same as the 15-minute. It's just smaller candles. So this is our last selling volume before the push up. Now, when we were pulling back into that level, we never made a higher high here, because if we did, then we would have hit that higher time frame objective. But we actually sort of filled in balance here. So in this case, you could have just placed your buy limit right there. That would have been a valid region. Or you can try to build confluence and scale into a lower time frame. Even if we had all the confluence in the world, we swept liquidity, sell to buy. Maybe this took liquidity, sell to buy, which it actually did. We took these lows in here just by a few pips. Had a massive sell to buy, higher high. We even could have built liquidity here to come and take into that level, and you could have placed a buy limit. Some people will do that. Sometimes I do that too. But in this case, I just didn't have enough conviction that we were actually going to go long from this level. So I didn't place my buy limit, but I did wait for confirmation into this region of price, which I'll go over in a minute, just because we are consolidating higher time frame. This never produced a higher high. Technically, this is a higher high, a higher low, and a lower high. This is not a higher high. So that's why I wanted to wait for confirmation, even though I had a little bit of conviction that we were going to go long. So now that would be the area in which I look to see reaction. So let's go down to a lower time frame. And it happened to be on the 2-minute in this case. Like I say, it happened to be. Doesn't mean it's always going to be. It happened to be. So before that level was met, the black horizontal line right here, we generate liquidity, equal lows. Counter trend is to the downside. At our last push, we had a massive sell into that level and then a reaction. So if we didn't see the reaction and price just continued, then there's no trade, right? We have to wait for confirmation. Doesn't mean there's going to be confirmation every time. In this case, there was, so now the setup is valid. So we have the reaction. We have swept liquidity coming into that higher time frame level, and we had a massive reaction from it. We broke counter trend structure. Wait, so we were creating lower lows, lower high, lower low, lower high, lower low, higher high. Okay, so before coming back down to mitigate, let's figure out where that mitigation point is. Well, it's tough to say because there's really no clear sell to buy candle. So with this massive move, this is really the institutionally sponsored move, but really this is where we snag liquidity, so it's a little bit tricky here. In this case, I can see this massive sell to buy and that little retracement in the continuation, and we also have imbalance between that wick and this wick here, so we need to fill that. So this is going to be my general area in which I would like to buy from, okay? So we pushed up, broke the counter trend, pulled back, created more liquidity. Higher high. How many people are treating this like higher high, higher low, higher high, higher low, reaction off of, some 61.8 fib level and then going long again, which is why price probably pushed up like it did here. How many people do you think are doing that? They're following that structure, having no clue and understanding where liquidity rests, where the mitigation points are, and that's their only confluence is this higher high, higher low sequence, and then the 61, 71, 78 fib to take it long again. Well, guess what? They lose yet again because price pushed back down. We have equal lows here as well. Liquidity. We create the liquidity, we snag it, take liquidity, and come into our level, right? So in this case, we entered at 31,018 and we had an 11 pip stop. I always like to do round number stops, just who I am. Higher time frame, where are we going? Well, we have descending liquidity here, so this would be a good target. Now, is there anything else on a higher time frame that we could potentially target? Yes, like I said before, these equal highs, and then that 15-minute imbalance at 1.3228. So that's where we're going to be headed most likely, and that is where I would have targeted. But I did not take this trade. It wasn't in time. The entry happened during New York session, which was actually a perfect mitigation for time and price because liquidity was introduced. We broke the counter trend and mitigated at 3:30, 3:45, 4 in the morning. That's prime London session manipulation time. That's when London session opens for me because I'm on the East Coast of the US. So that time of day is when London session occurs. We sweep liquidity and then we continue for the rest of the day for the rest of London and New York session. All right. So in this case, it would have provided a 1 to 11.5. So just like the other one, a 1 to 11.5, kind of coincidental, but anyways, 11.5% for that trade. Let's go back to it real fast. So what are the confluences that we have built? Lower time frame bullish move. We haven't come into the objective, right? We have the drawn liquidity to the upside, the equal highs, right? We also have this descending liquidity. Equal highs meaning, I already showed you earlier, but these equal highs, and then the objective. Haven't come into yet. Liquidity run to the left. That's another confluence. We also have, more liquidity that was running here. These equal lows were snagged at the end of New York session, so that's good. New York session, liquidity run, continuation for the rest of the day. But anyways, market structure, tap into it, build up liquidity prior, sell to buy, break counter trend structure, generate more liquidity, come down into it at the right time of day. I just didn't see it because I was sleeping. But anyways, you would get in at that level, 11 pip stop loss, 1 to 11.5 risk to reward, or about a 1 to 6 if you're using half risk. But then we pushed up, we made a higher high in comparison to this high. So now we know we have confirmed it and it's just going to continue long most likely. So now for another potential area of interest, London session, we had that mitigation. We pushed up to start New York session, 6:45, 7 o'clock. We have the retracement back into prior market structure. Okay, then we make the higher high from there. We stop, we don't pull back into the level, and we continue like this. So now we're kind of building liquidity here, right? We're building that liquidity for maybe a London session tomorrow, a New York session tomorrow, sweep of that liquidity and continuation, right? Liquidity run, mitigation of this level, continuation into our overall objective. So that wouldn't provide us with as big of a risk to reward, But if you think that, in this case, if you think that a 1 to 4.75 is bad, well, I don't know what kind of trades you're taking. But this, in my opinion, is still a very good risk to reward. It's close to a 1 to 5. You'd only need 1, 2 of these trades to pass a funding challenge if you were taking one. So in this case, you would have passed it in one go. Well, not right now, but if it hit take profit, you would. But anyways, you get my point here. Still very good risk to reward. 11 and a half, let's just call it 11 and a half, and 4 and a half, we'll just say. So that's 16%. All right, so 16% in 2 trades potentially. So in and of itself are great risk to rewards. So that is how we can build confluence within our trades to make high risk to reward trades and have high probability trades. If it's based upon the most applicable way of trading, which is smart money, because that's how the markets move, you not only get high risk to reward trades if you can put all the concepts together, but also your win rate increases. So that definitely helps as well. Now, I'm not saying it's going to look like this every time, but you should be building as many confluences as you can to take a trade, right? If you can't find confluences, there's probably no trade. If you find a lot, it's probably worth taking risk, right? So in this case, because we do teach one strategy, but it has 3 components. It's the smart money component, the supply and demand component, and the Wyckoff component. So in this case, we have liquidity runs, breaks of structure, market structure, time and price, stuff like that. That is smart money. And here, you can classify this as our demand level, as we could classify this as our demand level too. Demand and sponsor candles, pretty much the same thing, just as sponsor candles and supply levels. It's not always going to be a sponsor candle that's supply. We may have something like this, we're going like this, and then we break structure like that, and that becomes our supply. It's not a sponsored move, but it could be a supply level. So that's something we teach as well. But then at the same time, we also teach Wyckoff. So Euro AUD example, going back to it, we did accumulate into that level of demand. We sweep liquidity, break counter-trend structure to the upside, enter, create more liquidity, fake to the upside, take the liquidity, induce the buyers, induce the sellers, continuation. So there's smart money, there's supply and demand, there's Wyckoff, all in one strategy. We just have to put it together in a series of multiple confluences to get high risk to reward trades and high win rates overall strategy, high win rate strategy that we can win comfortably most of the time. Even though we will lose trades, we will win more than we lose, and our risk to rewards are going to be beautiful. So anyways, guys, if you want to learn more about how we do this, and you want to learn the true nature of order flow and take your trading to a whole new level than you never thought before, and want to learn the exact strategy we teach our everyday clients that pass funding challenges left and right, please feel free to hop over to our website, www.aerialfxtrading.com, to book a free consultation with one of our professional traders to see if not only you're the right fit for us, but if we're the right fit for you. We want to make sure that connection is there before we go all in with you to develop you and get you to where you need to be to make money and to hit your overall goals. All right, guys. So have a great rest of your day, and we will talk to you all in the next video. Thanks.